Good evening, everyone. Welcome to BISP Trainings. I am Faiza Alam, working as a functional consultant at BISP Solutions. BISP is a tech company providing technological solutions across the world. As we are having the NetSuite overview, under which our today's concerns are the things that we learn today. First, we will learn about the intercompany transactions. Then we will get to know about the elimination of intercompany transactions. Further, we will move ahead towards how to create an elimination journal entry in NetSuite. There are two ways around which we will take in, and at last we will be having the intercompany reconciliation. So first we will get to know what are the intercompany transactions. So intercompany transaction is a transaction that happens between two units of the same entity, or I would say it happens between a subsidiary company and a group. It is a transaction that occurs between the two different companies, which is a part of the same group also. So for the intercompany transactions, there is the transactions that are related to payment of dividends, purchase and sale of assets, and any borrowings or lendings. So there are some intercompany transaction types. So we will be taking one by one. First is the intercompany debt. So what is the intercompany debt? Intercompany debt is concerned with the elimination of all the loans that are made between the subsidiaries. These loans consist of either short term. These loans, I mean, can be of short term nature and of long term. The next type we are having is the intercompany revenues and expenses. So under which the all the related revenues and expenses and all the cost of goods sold must be eliminated. Why the elimination of these revenues and expenses are required? So that these are not being overstated in the consolidated financial statement. The last type we are having is the intercompany stock ownership. So it is concerned with the elimination of the ownership of the interest of the parent companies in its group or in its subsidiaries. So the type of transactions that are taken into consideration in for the intercompany transactions, there are mainly three kinds of transaction: the downstream, upstream, and the lateral. So if we talk about the downstream type, so what happens in the downstream? The transaction that is taken place from the parent or the holding company to its subsidiary. You can see an arrow which is going downward from the parent company to the subsidiary. So it is an indication that the transaction is taking place from the parent company to the subsidiary. In the downstream type, the all the all the maintenance of the records are done by the parent company only. Moving further towards the upstream type, so here we can see an arrow is going upward. So here the transaction takes place from the subsidiary to the parent company. It is quite opposite with the downstream. You can see in the downstream the transaction takes place from the parent to the subsidiary, but in the upstream the transaction takes place from the subsidiary to the parent company. So here all the recordings and all the things, all the required things are done by the subsidiaries only. The last type we are having is the lateral type, under which there is no interference. So there, or I would say there is no role of the parent or the holding company. Only the transaction takes place between the two subsidiaries only. We can see the arrows, it is not going upward or downward, rather it is lateral, which means that the transaction takes place between the two subsidiaries. So these are all about the intercompany transactions. If we move further towards the intercompany elimination, so intercompany elimination is the process under which a parent company goes through in order to remove transactions between subsidiary companies in a group. So what happens in this? The need for this elimination is mainly filled just because These are the transactions these are the transactions that are internal. Internal means these are not the transactions that are with the third parties or any unrelated parties. So for preparing the consolidated financial statements, these transactions are required to be eliminated just because they are internal, so that you know it is mainly done to avoid the double counting of the intercompany transactions across the group entities. The another thing we are having is the another point that is required to be taken into consideration is parent company completes the intercompany elimination process when they are about to prepare the consolidated financial statements. If we talk about the consolidated financial statements, so only the transactions that are related to the third parties are taken into consideration. That is why we are we are having the elimination of these transactions. The another need of making the elimination is when we want to determine the impact of certain transactions on the company's performance. So for that also the elimination is required. The other point to be noted over here is for elimination, the third party transactions are not taken into consideration, like the transactions that are outside, that are with the outside parties or unrelated parties, are not taken into consideration for elimination purpose. The intercompany elimination is required to track, record, or reconcile the transactions between the companies and the group entities. So this is all about the intercompany elimination. Now, next thing we are having is how can we take, or how can we view this intercompany elimination in our NetSuite application. So, moving on to the NetSuite application, this is my NetSuite dashboard where I have been logged in as an administrator. So, what happens in NetSuite? NetSuite automates the intercompany accounting by making the reconciliation and elimination of all the intercompany transactions more efficient, and it has reduced the risk of errors. Along with it, also improves the financial controls and reduces the manual efforts required to settle the intercompany account. If we talk about the NetSuite application, so here there are two ways around for having the intercompany elimination. So for that we have to see if the feature of automated intercompany management is enabled. For that we will be going under the setup, company, and enable features. So this is an enable feature window. We will be going under the accounting, under the advanced features. Here we are having this automated intercompany management. So what happens when we check this box? So NetSuite will automatically create a journal entry, elimination journal entry for any particular transaction. We do not have to, manually create any intercompany journal entry. And if we don't check this box out, like, so what happens? We have to create a manual journal entry. So these are the two ways around in which a journal entry can be created. If this box is checked in already, so what happens? That the NetSuite will automatically create an elimination journal entry. But if we want to create a manual one, so we will be going back to the home page. So for passing a intercompany journal entry, we will be going under the transactions over to financials, and we will be going under the make advanced intercompany journal entries. So here we can see an advanced intercompany journal window has opened up before us. Like as we have done before, the first thing that we have to provide is to change the form from custom to standard journal entry. After that, we have to select a subsidiary. And if I talk about the intercompany elimination journal entry, so for which for this kind of journal entry, usually multiple journal entries are passed. So the first part of the entry will be, will be covered for the parent or the holding company, and the next part will be covered by the by the child or the I would say it's, child companies or child subsidiaries. So here I am taking the subsidiary Asia, and I will, being an administrator, I can mark this entry as approved. So you can see that as soon as I have selected the subsidiary, the currency has already been populated over here, which is Singapore dollar for currency Asia. Date, it is today's date. If we want to change the date, we can change it from here. Like, I want this intercompany journal entry for 23rd of February. You can see that the posting period has changed accordingly. It was March 2022. But after when I have changed this date, the posting period has changed accordingly. Reversal date is not required to be given. Memo, if we want to give any memo for it, we can provide it. This is not a mandatory one. Going down towards the line level, so here you can see the holding subsidiary that I have taken over above was Asia. So Asia is already been taken over here. So we have to select the account, for which account do we want to pass this journal entry. So here I am taking the, we have to take any expense over here. Like I will be taking general and administrative expenses, and mention the amount in the debit column, like 2000. And if we want to provide any department, class, or location name, we can give it, we can provide it over here. I will click on add. Again, I have to select the subsidiary. I will be taking here Asia. The other account that I am going to take over here is, service revenue. And you can see that I do not have to mention the amount in the credit column. I will click on add. So this is about for the, parent or the holding company. The next part of our journal entry would be for the child or child subsidiary. So under the Asia, these are the subsidiaries that are falling. These are the child subsidiaries of Asia, which is a parent company. So for that, I will be taking here Hong Kong. I will debit this account by 2000 Singapore dollar and click on add. Again, I have to select the subsidiary, which is Hong Kong. you can see that this general and administrative salaries and wages have been credited by 2000 Singapore dollars. And I will click on add. So this is the way we can pass a elimination journal entry. So after passing this entry, after mentioning the amounts and the accounts and the subsidiaries in the line level items, we will go upward to check whether we have filled all the things or not. So as we have done all the things, we will click on the save option. We have to change the amount here. Let's see whether it will take or not. We will take some other account over here. We have to cancel this entry. We will take another one. So first thing, we will change the form from custom to standard. Here we will select the subsidiary, like I will be taking here BISP UK HQ. I will mark this entry as approved. You can see the currency is already here, which is GBP. Date I will be taking here 2nd of March. You can see the posting period has changed. So here for passing an entry, again we have to take another account. Subsidiary is already been taken over here. Like I will be taking a GST paid. I will click on add. Again I have to select a subsidiary. The credit amount is already been taken here. Next we will take the subsidiary, child subsidiary of BISP UKHQ, like we will take here Canada. Again we will be selecting Canada over here. Now we will click on save. So now we got the confirmation that our transaction is now been saved successfully. This entry is now approved for posting. So for having a look at it, we will go under the list where we can see that the elimination journal entry that we have just passed now is here. In order to view it, we will click on view. So here we can see that our entry is approved for posting. Entry number is here, the currency is here, subsidiary date, posting period is here. If we go down in order to see the accounts that are made, so you can see that the BISP UKHQ GST paid account has been debited by 500, and the accounts payable account has been credited by 500. And for its child subsidiary, which is Canada, the accounts payable has been credited, and the GST paid that has been debited in the BISP UKHQ has been credited in the Canada subsidiary. So why it is done? This is mainly done to remove the effect of any transaction. I mean, reversal is made for removing the effect of this transaction into the consolidated statements. So this is how elimination journal entry can be passed in the NetSuite application. So we have discussed that the two ways are here. First is if we check if the feature of automated intercompany management is enabled, so we do not have to manually create a journal entry. It will be automatically, NetSuite will automatically create that journal entry. But if that feature is not enabled over there, so we can manually create a journal entry for elimination as we have done over here. So our next concern that we are about to discuss is the Intercompany reconciliation. So what is intercompany reconciliation? Intercompany reconciliation is the process in which international groups that are there in the have to consolidate all the general ledger of their subsidiaries, and this is mainly done to eliminate the intercompany workflows. So what happens? The process, if we talk about the reconciliation process, so this process normally takes monthly or quarterly, and this is done to identify the mismatches between the subsidiaries in the group. So these mismatches can be with the invoice goods and services, but it can also be with other transactions such as loans and deposits, interest and other balance sheet items. The main purpose of intercompany reconciliation is to reduce the chances of inaccuracies that are there in the financial statements, which are the income statement, balance sheet, and the cash flow statements. So reconciliation reports shows a list of both cleared and uncleared and the other outstanding transactions for the bank account, and it also provides the balances for each item. So what happens if we talk about the intercompany reconciliation reports? So NetSuite scans all the transactions that are submitted for intercompany customers and vendors, which includes all the purchase orders and sales orders, item fulfillment and item receipts, vendor bills and invoices. Next thing that we are having under the intercompany reconciliation reports are the vendor return authorization and the return authorization. The other things that we are having is the credits and the credit memos. All the customer payments and vendor payments are all taken over here in for the intercompany reconciliation reports. So for the intercompany reconciliation process can be done by running a report. For that we can go, if we talk about the NetSuite application. So for having the intercompany reconciliation reports, we will be going under the reports, financials, and intercompany reconciliation report. So after clicking on it, we will be taken to that window where all the intercompany reconciliation, sorry, not all the reconciliation report for any particular period is there, and we can have the view of it where we can have the all the transactions that are there in the business, and with the help of which we can get the accurate record of any transactions. So this is all from my side, that today we have learned about the intercompany transactions, and how that intercompany transactions can be eliminated in the NetSuite applications. As two options are there. First one was we can manually create a journal entry, and NetSuite will automatically eliminate the intercompany transaction if the feature of automated intercompany management is enabled. And then we have got to know about the intercompany reconciliation. So in case of any questions, queries and consultations, feel free to write to us at www.bispsolutions.com. Thank you.